It's actually an interesting topic because the focus is on how the private sector can benefit from the decision, if you like, of the Arab financial institutions to significantly enhance the support they give to Africa in terms of financial resources. It's also interesting because we hear of the launch of the Arab Africa Financial Consortium. Now, when you look at the tall list of the financial bodies that are supposed to be part of this exclusive club, they are all DFIs, if you like, or sovereign wealth funds. We had the group chairman of UBA Bank here this morning. I didn't hear UBA being mentioned as part of the consortium. But what we want to hear, because we heard it from Dr. Sidi Uttar, that more and more BADEA and its partners are looking to support the private sector in Africa. And I know BADEA, you have this innovative idea of supporting African banks with capital so they can lend on. I want you to talk about that. But she's also mentioned a good point in a sense that maybe they get it at a very low rate, but they slap a much higher rate on it. So it makes the private sector in Africa not as competitive as your support should be. How do you ensure that if, for instance, you give a bank in Ghana like CBG, GCB, Prudential, Access, or whatever the private banks are, you give them some credit on lending credit facility, and you ensure that the rate would not be too high as to make it uncompetitive. How do you ensure that? And how can you also tell us more about the kind of support that you are giving to the banks on the continent?
Okay, thank you very much. Let me start by the support that we do to our regional banks. And by default, they are very specialized banks, and they are very important to us because somebody was talking earlier about the multiplier effect of development. This cannot be achieved without helping those institutions. And we do have a very strong belief in BADEA for the prosperous of Africa. Our African institutions has to be supported by all kind of means to enable them to do what's required in their area of expertise. The innovative mechanisms that BADEA has recently developed to contribute to the capital increase of those institutions. And by default, this will enable them and will improve their balance sheet and give them a lot of edge, either in terms of resource mobilizations, in terms of going to the capital market and issue the required bonds. And we think the better way, rather than involvement in different sectors that are very specialized, is just let us help those institutions in order to enable them to take the required role in the sector specified. We have a lot of examples without mentioning the names, but recently we have a very advanced talks with Shelter Africa Development Bank. The mechanism is so simple. It's out of the box, innovative way of doing it. Rather than going directly to help in the capital increase of those institutions, we help part of the member states who are the shareholders into this institution by providing them a loan that's specifically dedicated to capital increase. The process involved a tripartite agreement and a later sub-agreements that will be done directly between the countries and BADEA. The umbrella one will be between these institutions, BADEA, and the general concerned country for the capital increase. And believe me, this will have opened a lot of door even for the other partners to come and increase their capital in that institutions. We have the proof of a multiplier of 4 times for some of the institutions. And because they are on the ground, they are better than any other MDPs in terms of identification of projects, in terms of improving the pipeline, and achieve the required developmental goals into that field.
Our continent carries a high risk profile. I'm not too sure if BADEA looks at that risk as defined by the West or the opportunities as known by us. How do we get the private sector to perform even though we are seen as high risk? And those who define as high risk, they know that the profit here is also high, not high risk.
So thank you very much, my brother. I think it is a very big, nice debate, and I thank really Africa Prosperity Network and BADEA, Africa Business Council, for bringing us together.
Thank you.
The whole issue with the whole issue of the private sector, I believe I call it the triad of empowerment. We need to empower our African private sector. So this is pillar number one, private sector strengthening, including SMEs, women and youth. And this will be with information, with education, capacity building, training, access to information. And the second pillar is policy advocacy. We need the policies of the government actually to be enabling environment, conducive business enabler, and also we need preferential treatment for our business sector. We cannot allow all multinational companies to come and take our tenders and we leave out our private sector. So this is one thing we are really pushing, and we already had it as a recommendation of the African New Private Sector Forum, adopted by ministers of finance and planning, that we have at least 40% of all government procurement goes to African private sector. So whatever on the African soil, we should not bring it from outside the African soil. That's number one, to really promote our African private sector. The third pillar is product development. My sister Coco, how many billions of the industry of chocolate? It's Switzerland who is doing the chocolate. It's the one who's taking all our things. Diamond, minerals, gemstones. Gemstones goes to Jaipur, India to be cut and polished and then go to international market. We are not empowering our people of Africa. Health. Let us, yes, please, we need to empower our people. Let us be the voice of the African women, the rural women, the cross-border traders, the youth entrepreneurs, the youth who have no jobs. How can we have this money dedicated towards the empowerment of our people? And this is actually the question. It's not about high risk.
She's very passionate about her continent, and we need more Dr. Asfors. Theano Habiban, Shelter Afrique. I think it had sort of a reputation that was not too high. Okay, before we didn't see the impact as much, but we've seen that over the last few years we are seeing changes. It is now Shelter Afrique Development Bank. Please, can you tell us more? What is different now? And how is the development bank model going to support Africa's private sector in the real estate business?
No, thank you very much for that. Shelter Afrique has been in existence for 42 years. It was set up in 1982 by actually a mandate from the African heads of state, right? That mandated the African Development Bank to actually set up an instrument that would address urbanization. Because following the independence days, obviously we didn't have capacity to build our cities and make sure that the population growth can be controlled and managed properly in our urban cities and across the whole countries, all the countries. So this is exactly why Shelter Afrique was created, as a financier of the housing sector. So historically, the institution has been actually making sure that Africans have access to dignified dwellings in the different countries. We didn't have any other institution that did this. At some point, Shelter Afrique was almost like a developer also, okay, taking the kind of risk that nobody else would have taken, and especially we didn't have capacity for that in our countries. So this is why Shelter Afrique has been the only institution that actually supported the governments to do land development right? To really make sure that you have proper basic infrastructure to build homes, for people to build even incrementally beyond developers, because we did not have a developers industry. So now fast forward 42 years, we believe that Shelter Afrique should play a much bigger role. So we came to the job a year and a half ago from other multilaterals, which are more global, to say that we need to reinforce our African institutions. So that's why we're here at Shelter Afrique. And we recently underwent a transformation last October. The shareholders, which are composed of the 44 African countries and African Development Bank and Africa Re, have decided to transform the institution into a development bank. So our official name today is Shelter Afrique Development Bank, and we're undergoing that transformation. Why development bank? It's really to show that Shelter Afrique is not only into the bricks and mortar, just the four walls. It's about dignified urban housing and dignified dwellings for our African people. And while you're doing that, you're also fueling the economy, because housing creates jobs, housing creates wealth, and housing creates better education and better health. If somebody is poorly has poor accommodations, there's no way the kids would be focusing going to school or having better health, because sanitation goes with it. So the transformation that Shelter Afrique has undergone as a development bank takes into account the full value chain of the housing sector. So we address the crisis that our nations are knowing today through four pillars. So we finance banks, financial institutions within the countries, so that the financial institutions can get access to funding to finance developers and to finance mortgages for home ownership. And then we finance developers directly, right, to address the supply side, right, and large scale housing construction companies. So private sector, we do finance. And the third pillar is PPPs. You mentioned it. PPP will be key because you can get access to cheaper funding, to cheaper land from government, and Shelter Afrique would help structure the PPP with the private developers, and we finance them.
Some of us, and I say so because Africa Business Council is a partner for this panel discussion, Africa Prosperity Network, even BADEA. All of us are saying that in order for the economic integration that we are seeking on this continent to work, it must be owned and driven by the private sector. How institutionally are you helping to get the private sector to own and drive it, rather than seeing it as a political thing?
There is no prosperity if you don't resolve the issue of education and if you don't resolve the issue of food security. So in fact, all the countries that have resolved it, or that moved into prosperity have resolved those two, education and then food security. But when it comes to education, what do we see in our continent? Today, in most of our countries, yes, we have increased our investment in education. And especially if you compare that with the GDP, most of our countries have increased the investments in education, but our population is growing. As of now, we have more than 450 million living below the poverty line. But at the same time, if you look at actually our education, especially the public education, it's bad. Let's just put it that way. What does it mean? It means that many families have access to non-quality education or to not education at all. Now, and at the same time, we are saying that we are going to increase our capacity. Let me give you the example of, I think we can compare. 40 years in the past, Taiwan decided to invest into the semicons industry, right? And of course, they went intentionally, increasing the level of education, then eventually started actually investing into a specific sector, and today they are among the champion, which is TSMC, right? But that came because they have resolved the two problems. Here we are not doing, I think, what need to be done. But beside that, and this is even even making the situation, I would say, worse. The middle class that we have in the continent, our children are not going to public school because we don't have good public school. Most of our children are going to private school. And those who can afford, which is the elite, children go to international school. When children go to international school, that means we are preparing them to migrate out of the continent. Therefore, the brains of our continent, the trained brain, we are even encouraging it ourselves. We are participating to that. So we need, I think, to take a step back and to think again about what we are doing in education. Otherwise, whatever we say about private sector, won't necessarily work. Now, let me go back to a question about the private sector itself. Of course, you can't have a CFTA if, number one, we don't have infrastructures. There is no regional integration without infrastructures, definitely. Infrastructure to move around at the same time, to move goods, to allow people to travel, and to move from one country to another. But more importantly, we can't even have integration if the free movement of people and goods, is not implemented. But at the same time, I can understand the challenges that our countries are facing because it's very difficult for us. Most of our citizens don't even have, we usually say population in Africa. There is a reason why we use population instead of citizens, because most of our citizens are not registered. Actually, more than half of Africans don't have birth certificate. They don't have ID. Countries don't know their own citizens. So declaring statement to say we want free movement of people actually means that we first need to fix, the issue of the registration. That's one of the reasons why maybe leaders are not moving toward making sure to ratify the decision on the protocol on the free movement of people. That's number one. Number two, border controls as well within the region at the same time. So there must be some steps that actually regional economic communities may need to take to ensure that there is free movement of people within the regional economic communities, and that if I get a visa, let's say for Zimbabwe, that should allow me to go in every country of the SADC. But that requires as well investment in technology, investment in public sector, investment to capacitate actually border management. There is so many things. So yes, private sector, we all want that to happen. We all want the ACFTA to become a reality, but we really need to address, number one, the issue of infrastructures. At the same time, the issue of the free movement of people. That's number two. And there are so many other steps that we need to work on in parallel. But in my opinion, we need to move beyond statements because we like statements, seriously. We do a lot of statements. We come to conference, we gather, and then we say, let's do this, let's do that. But maybe there are certain basic things that we need to go back, sit, reflect, and see how we can actually fix them step by step, one by one. Thank you.
Thank you very much. Patricia, we talk about Arab-Africa cooperation, but I'm sure if you ask many people in this room, the thinking is more about what we can get from them rather than what we can give them. As a leading private sector operator on the continent, what, in your view, can we give them? And how can even our private sector players in the Arab region and the African continent work together and benefit from each other?
I think there's a lot we can give them. There's definitely a growing demand for cocoa, for example. And but unfortunately, they buy through Europe. So we could start by having this direct trade relationship. They are There are more chocolate factories in the Middle East now and Northern Africa and all, but they don't buy directly from West Africa. Look at cashew. Cashew will leave here, go to probably Vietnam to get processed, and then go to this region. They do consume a lot of nuts, and these nuts come from our region. Soya, most of the agricultural produce they have there come from here, but they're transferred through other places. Mangoes, I think, apart from India, we are not too far from the Arab region. But how come our pineapples, our fruits and all, why can't we supply them directly? So maybe these are some of the things we can look at. And also trading with Arab, yes, but then you talked about trading within ourselves. And that requires a lot of policy reforms. My brother talked about infrastructure. That is good, but we can look at the low-hanging fruits. Reforms that cost nothing, but that could really help facilitate transactions and trade between ourselves.
We get into the end of the panel discussion and ultimately the end of the this BADEA event. This particular panel was co-sponsored by the Africa Business Council and Africa Prosperity Network. And I say so because Idris mentioned that we have serious challenges about integration because we are not able to move, we are not able to buy and sell across our borders. But an agenda item this afternoon at the AU Coordination Summit is that how do we get to buy and sell across Africa, across our borders, just using our mobile money wallet? And I'm going to ask all of you, if you support it, say yeah, so that they hear it. And we say it loud enough so that they hear it and adopt the report. And if they adopt the report, and the reason is pretty simple. Over 90%, as was said here earlier, over 90% of businesses on the continent are MSMEs, employs over 65% of Africans. About 500 million Africans use mobile money. Okay? 70% of trade with mobile money across the world is on our continent. Out of the 1.4 billion or so people we have, over 500 million use mobile money or have mobile money accounts. Majority of people who use mobile money are small scale businesses, okay, small and medium scale businesses. Beyond that, we have a combined GDP of, I believe, 3.1, 3.4, depending on how fast our local currency depreciates to the dollar. About 3.1 to 3.4 trillion dollars, our GDP. Yet, just a couple of years ago, the total value of mobile money transactions on our continent was 1.2 trillion US dollars. And this is without the ability to buy and sell using your mobile money wallet across Africa. We've been trying to have a single currency, particularly in West Africa, I believe since 1989. We haven't been able to meet the convergence criteria. But with mobile money, as the vice president of this country said 2 weeks ago, with mobile money, you can have effectively a common medium of transaction. Because what it means is that me here in Accra, I can see something on Instagram in Kenya, and I will buy using my CD, local currency, on my wallet, and then they will receive it with their shilling in their local currency without using the US dollar or any other medium. That costs about $5 billion. Can you imagine how much value or jobs we can create, or how much we can enhance intra-African trade if just by this small device in our hands, we can buy and sell across the continent. Some may say that there will still be the issue of transport and logistics. But some of us believe that once you create the demand and the supply is there, investment will get into transport and logistics to carry the goods and services across. So what is happening at the AU meeting this afternoon is absolutely critical if we're going to make the single market meaningful to ordinary people on this continent. And if the small and medium scale businesses on the continent don't embrace the single market, it will not work because 90% of businesses are within this sector. And just being able to use your mobile money wallet to trade across the continent will be the fastest, easiest, and most impactful way we can feel the economic integration agenda. So if you are in this room, whether your mouth is full or not, and you support the report before the AU this afternoon, and mind you, all the regional communities are here meeting. And if they adopt this report, it can happen. All we need is political will, because the technology is there to have a Pan-African payment system. Technology is there. The enthusiasm of the private sector to make it work or to use it is there. All it needs is the political will and the enthusiasm and the courage of our central banks to make it happen. So if you are in this house and you want continent-wide interoperability with mobile money, say yeah. Oh, I didn't hear you. It looks like the no's have it. Say no if you don't want it. I heard one. So
No.
No, I think the no's have it. I want to hear it louder. If you want mobile money interoperability across the continent, say yeah.
Yes.
I think they heard it at the conference center.